Hey everybody, welcome back to another video. So today we're going to look at the remarks shared by Cathie Wood, the owner of the fund ARK Investments, and she makes some interesting comments around DeFi and crypto. So stay tuned for that. I think it's really important, just before we head into this, that as I know a lot of you are subbed here for crypto videos, but I think it's really important that we understand the wider market. A lot of the crypto channels out there will not spend enough time on the fundamentals around the broader economy, and I think that's a big failing. As people who are looking to get interested in crypto, we need to understand the wider market. I know there's this whole movement around decentralization and crypto is its own thing, which I believe it is, and it will be taking over. But at the same time, there's a lot of institutional money in the traditional markets, and it does, whether we like it or not, affect our overall crypto market as well. So it's really important that you're tuned into both things, as they can move the markets either way. So Cathie Wood, for those who don't know, runs a really popular set of ETFs. Her flagship one, ARK, which you can buy into amongst various others, and her total assets under management is around 50 billion US dollars. So she knows what she's talking about, although she's having a slightly poorer year this year, and that has got all the haters to come out and say, oh, Cathie Wood never knows what she's talking about. But let's put this into perspective. Let me show you Cathie Wood's, there we go. So let me show you Cathie Wood's ARK returns. Okay, so this is for the ARK ETF. So people are complaining that year to date she's delivering 5% versus category 5.46, and she'll be the first to admit that she's underperforming this year, and we'll come on to the various reasons why and what she expects. But let's just take a look at the overall annual returns, right? If you bought in ARK in 2017, you'll have had 87%, right? I mean, that is just phenomenal just in that 1 year. And then people would have complained again in 2018 when you had the 3.58%. So they would have outflowed, but then she delivers a really strong 35% and then a phenomenal 2020 of 150%. So I think a lot of the people kind of complaining are those that want to throw in their money, expect returns in a couple of months and get out, right? And that's not the right view for an ETF. You need to be buying into ETFs and believing in their overall strategy, because the kind of things she's betting on in terms of high growth companies, telehealth companies like Teladoc, her bio companies, they take a lot of time for them to come into fruition and really get their massive growth. So, you need to have a 3 or 4 year horizon at least with some of these funds. Right. So what did she do? So the first thing she wanted to talk about was the fiscal situation. So she covers the backlog we're getting in Washington around the stimulus package. You've got the 3.5 trillion human infrastructure package and the 1.2 trillion normal physical infrastructure package. And she says, look, this is gridlock and this is causing some worry for the market. But she said the slightly more worrying situation is the tax hikes, the fiscal situation around the tax hikes and whether we're going to see her tax hike. Her view was that we won't see any tax hikes. Her rationale behind this was the midterms are about a year away, and she said she'd be really surprised to see a tax increase go through, particularly when a lot of the swing states have voted in the polls that they don't want taxes to go up. So that's her view on the fiscal policy. And I'm going to be running through this as she covers quite a lot in that video. So the next thing she covers off is monetary policy. And we can see through monetary policy, if I show you, you can see that the M2 supply of money has come down. So you can see it peaking at 27% here, and it's come down to 13.16 reading in August. And it's come down, the monetary supply. And the next conversation in terms of monetary policy is, and we've spoken about this a lot on this channel, is when will we see some tapering? When will tapering happen, and when will rates go up? So she says that she feels neither one will happen this month. I mean, I think that's obvious that we're not going to see any interest rate hikes this month, because we've kind of factored that in for the back end of next year, because we've been told that tapering and interest rates will be decoupled. Jerome Powell's made that clear. But she feels that you could get an announcement of taper this month, although she feels it's unlikely. So she's a bit mixed on that one. We could get an announcement. My view is we could get an announcement of a taper this month, depending on the jobs and CPI reading, but it would depend on those readings particularly. But what she did say was that the tapering announcement will make no difference. And I agree with her on that, because we've said this time and time again. The notion that we're going to taper has been telegraphed very well by Jerome Powell. No investor can claim that it's not been evident, it's not been communicated clearly, and therefore it's very unexpected that we'll get a taper tantrum. What she did say, however, is that the banks are starting to worry about loan growth, and not because of interest rates, but because of DeFi. And this was a really interesting one that she brought up. That she says, look, just a short while ago, we were in $10 billion of total value locked on Ethereum. This blue line here is Ethereum, by the way. And now we're sitting closer to 100 billion. I mean, the peak here was about 89 billion and the peak up there was 93 billion. So she's saying that the banks are now starting to worry. This is, this is not immaterial anymore. This is 100 billion, which would have went into banks, but people are getting the APY yields on the Ethereum blockchain. And that's not to take into account the other, a peak here, 35 billion in the peak was on Binance. And then you've got a peak on Solana, 11 billion. They've only just started. And think about it. Ethereum was only at 10 billion total value locked in November. And Solana's at 11 billion now. Okay, put that into context. This is going to go crazy. We've spoken a lot on this channel about the various layer one solutions from Solana, from Algorand, from you've got Solana, you've got Cardano, you've got a lot of great layer one solutions. And, this total value locks problem, they're all going to be growing. That's going to start weighing not on each other. This is not a battle between Solana and Ethereum. This is taking total value locked away from the traditional banking system. And it's interesting, Cathie Wood, who's got so much experience in the institutional world, is saying this will have impact on the banking sector. So that's interesting to see, and a very interesting thing that she says this will be one of their key worries. And we've said this time and time again. We know this is one of their key worries, but they're just trying to bide their time. They're not going to come out and say, oh, we're scared of DeFi. DeFi is a big risk. They need to pretend like it's nothing, right? And just hope it disappears. But we know that's not happening anytime soon. Well, not happening at all. So they need to come out and address it, these institutional banks. She then moves on and says the next worry after, tapering kind of happened, she thinks the debt ceiling will resolve itself. She feels fiscal policy will be okay. We won't see any tax hikes. The infrastructure package will go through in some version. And she says the next big worry then, after we see some tapering, is will we see a recession? And she says the issue here is we have a bunch of inventory starting to build up. And her belief is that the inventory is being stored on garages and driveways. And we've heard this before in her updates. She's of the impression that, look, there was a whole bunch of ordering going on during the pandemic and that people are now stocked up on various goods. She now says we're going to start seeing some stories come through in the earnings around inventory piling up. So this is very interesting because up to now, we've heard a lot of things around supply chain issues, companies can't keep up with demand. But now what she's saying is you're going to start getting the opposite issue where companies have too much stockpile. And allow me to explain this. So if you imagine when the COVID pandemic happened, when it started, you had a whole bunch of demand for goods, okay? Not services because people are at home. People were buying goods. Now, when people were mass buying goods, companies couldn't keep up. They didn't have enough inventory. So what happened was they were in a race. They were in a race to build up a whole bunch of inventories. And so what they started doing was they started double and triple ordering. Now, they were double and tripling ordering to make sure they weren't in a supply chain issue and they had enough stock in their warehouses so they can, meet the demand. Now, what happens thereafter is once that demand has subsided, because COVID has started to dissipate, people are starting to go back out now that they're vaccinated, people are moving from goods into purchasing services, right? They're going to restaurants, they're doing things, experiences. Now, what that means is companies will now be stuck with a whole bunch of excess inventory due to double and triple ordering, but now the demand is gone, right? So all that, inventory pile up they were going through to try meet that demand. The demand is now gone, it's subsided, and now they're stuck with a whole bunch of inventory. So she predicts this could be a big issue, and she's looking out to see if a few CEOs will start talking about this in their earnings calls. Well, there's definitely something we'd want to be listening to as well. And she said, Bed Bath & Beyond and Kohl's were hit hard, and that's interesting that she mentioned those. She then moved on to say the next fear is China. So she's saying that economists are failing to add this to their forecast. She's saying growth isn't China's economic focus anymore, but because they're focused now more on common prosperity, right? And she's saying this could have an overall impact, not just on Asia, but Europe as well. And obviously the impact reduced Chinese growth will have on commodities can be a global issue and affect the US as well. So she says another fear will be China on the great scheme of things, and they're focused on common prosperity versus just pure GDP growth, which is what they were focused on in regimes prior. Now, the other thing is, what else is the market worried about? Well, the market is worried. We spoke about this on the channel last week. We're getting a lot of rotation out of high growth stocks, right? So we've seen the rotation. We saw yields climb, and we saw rotation away from high growth stocks. And I explained, on previous videos why we're seeing this. We're seeing this because when there are fears of persistent inflation. And we know Jerome Powell mentioned this was transitory, but this market is starting to think this is becoming more, let me just show you here. It's starting to become more persistent, right? So transitory will be, you go up and you come down, right? The market is now worried that this is going to hover here higher. This is your CPI reading, which is sitting at about 5.3%. The market is worried this will remain, elevated for a longer period of time. Now, what that does is that erodes the future coupon payments of your bonds. Your bonds become less valuable, as well as your high growth stocks, right? The future cash flows, which would be discounted for your bonds, for your high growth stock and your bonds, will become reduced, right? So what happens is bond prices go down, less people want to buy bonds, it's less attractive, and therefore the yield goes up. And same for stocks. People rotate away from stocks to companies with higher cash positions who are achieving their growth today. Really important we understand that, right? The high values on growth stocks are because you're paying for earnings in the future, high PE multiples, right? But what people are doing now is they're saying, hang on, I'd rather the £1 profit today than a £1 profit in the future, because inflation is too high. It's going to erode. That £1 by then won't buy me much. I'd rather buy it now and put it into the markets today. Okay, so that's the switch we're seeing. And she mentions this as well. She says, obviously Cathie is really focused on high growth companies. She's got Tesla, Teledog, various other companies, Spotify, and she's saying markets are worried about inflation. And we know that, right? We spoke about that a lot on this channel. And it's a bit of a concerning thing for markets, because what we said was you were expecting. So if you imagine inflation is done on a year-on-year figure, okay? So this is saying 5.3% year-on-year. Now, we know that during the peak of the pandemic, prices tanked to zero. Nobody was buying anything, right? So we were expecting these months here, which we've just had, to be high, right? Because you're measuring versus a very low number. So your year-on-year figure is going to be really high. That's what's called a base effect. And Cathie Wood spoke about the base effect as well. Now, we thought this base effect would subside, because if you remember going back after summer, people started buying things and coming back out of lockdown. So we're expecting these figures to get better around August, September. So that's why the market is concerned around persisting inflation. And that's why that would lead to a rotation away from bonds and away from growth stocks into companies and assets which give you profit today, okay? Dividend paying stocks, high cash companies who are delivering earnings today, low PE companies. Okay, so that's a really important thing. Now, the next worry is, the other thing is, what is causing some of this inflation? So Cathie Wood shares some thoughts. She says, look, obviously it's the supply chain shortages. She says there are some real, chip shortages we're seeing in the economy. She says businesses have been scrambling for a year, and therefore you've had the triple and double ordering problem, which I've just discussed with you here. And she says that's been persistent in a lot of the areas in the CPI reading, because your CPI reading, is comprised of a few different categories. She says that this issue of supply chain shortages is what's causing a higher weighting in the CPI, okay? So she's saying that could be one of the factors that we're seeing. Now, she also mentions how many cars were bought. She said 18.5 million cars were sold in April versus 12.3 million in September. So that's a massive decline in September versus April. And she even calls it a recession-like decline. And she shares the idea that this was a lot of pre-buying, right? So we had a lot of pre-buying in last year during COVID. A lot of people were pre-buying, and that the inventory sat on driveways. She said this in her previous update as well. She's of the impression that of a lot of these goods are sat in people's houses and driveways, right? It's an inventory problem on the consumer side. And she mentions this for Clorox sales declining as well. She said that last month, that Clorox, everybody's got enough Clorox in their houses, right? Therefore, nobody's buying more, and Clorox will have an inventory problem because they've just doubled and tripled ordered to meet the demand, but the demand subsided because everybody's got it loaded up in their homes. Now, she also mentions that Elon Musk, GM are now starting to say that the chip issue is starting to loosen. Now, that's a bit of an interesting one because we heard, the CEO of VW and a few other car companies saying this could persist into 2023. So it'll be interesting to see how quickly does this resolve. She mentions that supply has been turning on from Taiwan and Korea for chips. And she says from her experience, Korea, once they switch on supply, are very aggressive at ramping. And this could resolve the problem. So that's something we'd have to watch out for. I mean, I'm getting a few mixed messages here. Some people are saying it's loosening. Some people are saying this chip shortage could be here for a long time. I don't think we know yet until we see the figures improve. Now, she also mentions the fact that future people bought cars now and they're on the inventory, but they're now waiting for their next purchase, which will be an electric car. And this was her premise in the previous video she posted last month as well. She's saying everybody will now make the change to electric. That's her ultimate thesis, and it makes sense, right? She's so heavily invested in Tesla that obviously she would believe that too. And she says she sees a big decline in auto sales because people are now waiting and they're going to go buy an electric vehicle. Now, coming on to inflation, she's also mentioned there's a whole bunch of assets which have fallen dramatically in pricing. So she says lumber dropped 64%. This is from the May-June figures last year. She quoted that copper dropped 15%, iron ore 51%, your DDR RAM fell 20%, the dollar was up 5%, and she says this should be anti-inflation, right? This should help bring inflation down, that all these prices have suddenly ticked down because all of these had a decent weighting in the inflation readings we were seeing. Now, she also mentions that when the dollar is strong, people with when prices go up, when you're in an inflationary environment, she says people with excess inventory face losses, right? Sorry, I'm saying that the wrong way around. So when prices go down, people with excess inventory are facing losses. Okay, so she's saying what they do is they then sell that excess inventory at a loss, with just it's a self-fulfilling prophecy that the price will then continue to fall down, making the issue worse. Okay, so her thing is that, look, this is going to create a deflationary loop, and she's always been of that view that the issue here is not inflation, it's deflation, and she's holding on to that belief, and it's a very unpopular belief, but she's sticking by it, and she's saying the risk here is not inflation, it's deflation. Okay, so very interesting there as well. She speaks a little bit about oil, and that oil is unnerving people. She says it's threatening to go past the $77 2008 peak. She says China will have an impact of oil, but China's reducing their oil output due to the Olympics. So we need to watch that level as well. She says, look, we were at 101 million barrels per day. We rebounded to 97 million barrels per day, and she said she'll be surprised if we get back to the 101 barrels per day. And she overall sees a shift to electric. Okay, so that's interesting. And overall, we know she's spoken about this before. She says the real threat is deflation. She thinks there'll be good deflation, disruptive innovation, and AI developments. And if you want a video which goes into what she means by all three of this, search in my name and Cathie Wood. There was a video where I do a breakdown of one of her comments, and I break down these three in detail. And ultimately, to finish off, she touches upon the stock markets, and she reiterates that, look, she's having a bad year. The S&P is up 15.6%, amazingly. The Nasdaq is up 12.7%, and her fund is underperforming. And just to recap what we saw there was a massive rotation into value stocks, and then we saw a rotation into defensive also. So energy and financials are doing the best at the moment. So energy is up 43%, financials are up 29%, and then it's real estate and consumer staples. So the defensive type stocks are doing well. Nobody is in a risk on mode right now, and therefore they're not loading up on bio plays or massive amounts of Tesla or Palantir or Spotify or any of the other assets in her fund, right? That's just not what's going on right now. And so, yeah, the concerns are, look, there's concerns around fiscal and tax issues, there are concerns about China, concerns about inventory pileup. These things are persistent during this month, and people will be worried about these things. Inflation and interest rates will fall dramatically once these concerns kind of subside. That's her view. She's saying once we've resolved these issues, we see that the fiscal and tax issues aren't an issue. China concerns kind of start to dissipate away, and we realize, okay, this is how we're going to solve the inventory problem. She feels inflation and therefore interest rates will fall dramatically. And then this is the big view she has, is she says the fears will then go from stagflation to deflation and a recession. So she says people shouldn't be worried about high inflation. She's saying they should be worried about deflation and a recession. Okay, so that's really interesting there. She also says that she feels treasuries will stay low. She feels corporate bonds will continue to rise. She feels commodities will continue to fall, and oil she believes will fall, although she even said that she's been wrong on that a few times as well. And finally, just to reiterate the crypto point, she says crypto will climb. And she even mentions the El Salvador situation, which we've covered. We know that's a big deal here in the crypto space. But the fact that somebody's so focused on the institutional world, and a lot of institutions listen to what Cathie would say, she mentions that crypto will continue to climb. She spoke about El Salvador making Bitcoin legal tender. And she mentioned that 2.7 million out of the 4 million in El Salvador have downloaded the crypto wallet, which is amazing because only 1.2 million have checking accounts. So we know this because we've looked at this, but the fact that she mentioned that on such a stage was really important, and it will get the message around to the institutions that Bitcoin and DeFi is a serious threat to the traditional system. She also mentions that the El Salvador government started mining using BTC, using volcano energy, which was really interesting. And she mentioned that the dollar strength is affecting emerging markets. So as the dollar gets stronger, emerging markets have to pay their debt in dollar, right? It's dollar denominated, and that can affect emerging markets. And that is one of the reasons why they want to move across to a cryptocurrency. And that's why BTC, she says, is a great insurance policy for anybody else. So there you go, guys. That's Cathie Wood's view on what's going on. That's a lot to take in, but I think it's really important for those of you who have got through this far. It's really important that you watch and try to understand all these different variables, because if you're investing in stocks, if you're investing in real estate, if you're investing in crypto, we need to understand the dynamic of the entire market, right? And if you break it down, she spoke about the fiscal policy fears. She spoke about monetary policy, whether we'll see tapering and interest rate increases. And she spoke about the supply chain fears around inventory piling up. So these are the kind of concerns we're seeing on the table right now, but she thoroughly expects a return back to growth, and she says she's excited about it. And I think, she's kind of taken a beating so far this year to date, kind of getting almost we're in the 10th month now of the year, and she's hoping that there'll be a rotation back to high growth once people realize there aren't exciting returns in the value plays, and once these issues subside, people start going hunting for higher return, and that's what she's waiting for. So there you go, guys. There's an update on the market from Cathie Wood. Hope you enjoyed this video. If you like this type of macroeconomical breakdown, then please don't forget to comment below so I know, and I will see you in the next one.